Got the thumbs up. Great. Let's go on the record. This is the appeal of Auto Cellular Systems, Inc., OTA case number 18063345. Today is July 23rd, 2020, and the time is approximately 10:04 a.m. This hearing was originally scheduled for Cerritos, California. However, due to the ongoing health concern, we are holding this hearing electronically with the agreement of all the parties. My name is Daniel Cho, and I will be the lead administrative law judge for this appeal. With me are administrative law judges Andrew Wong and Josh Aldrich. Can the parties please introduce and identify yourselves for the record, beginning with appellant?
Good morning, Your Honor. This is Elaine Cerritos, representing the appellant, Auto Cellular Systems. And on the phone is Mr. Dave Parker, a witness in this matter.
Thank you very much. Department?
This is Randy Suazo, hearing representative.
This is Jason Parker, hearing representative.
This is Kevin Smith from the CDTFA Legal Department.
Thank you very much. The issue in this appeal is whether any additional adjustments are warranted to the determined measure of tax. With respect to the evidentiary record, CDTFA has provided exhibits A through E, and appellant did not object to these exhibits. Therefore, these exhibits are entered into the evidentiary record. Appellant has submitted exhibits 1 through 6. CDTFA has not objected to these exhibits. Therefore, these exhibits are entered into the evidentiary record as well. With that background, we're ready to go into witness testimony. Before we have the testimony begin, can I please have Mr. Parker, I see you're on the phone. Would you mind raising your right hand? I'm just going to swear you in for due to our regulations.
Proceed.
All right, thank you. Do you solemnly swear or affirm that the testimony you're about to give is the truth, the whole truth, and nothing but the truth?
Yes.
Thank you very much. Mr. Rayo, you may begin your examination of the witness.
Good morning. Can you please state your name for the record?
My name is David Parker.
And we're here today with respect to Auto Cellular Systems. Are you familiar with that entity?
Yes.
And in what capacity, sir?
I serve as the secretary of the corporation, and that's my official designation.
Were you an owner of the corporation as well?
The corporation was a minority-owned corporation. I was a 30% owner and investor.
And what type of business was Auto Cellular Systems?
Auto Cellular System was, at one time, the largest retail sales outlet for Verizon Wireless.
How many locations, approximately?
At the peak, they were over 30, from what I remember.
And where were they located?
The stores were located across Southern California, reaching as far north as Ventura, as far south as San Clemente, as far inland as, I want to say Chico, or Chino, not Chico, sorry.
And when was the business founded?
The business was founded in 1989, and the business was subsequently sold in December of 2013. It was sold to a national franchise.
So based on those years, it had a 24-year history then.
Yes, yeah, very, very nice, very successful chain of Verizon outlets.
During those 24 years, was the appellant business subject to sales tax audits?
Yes, again, I'm an investor, so I have limited knowledge, but the sales tax audits were performed regularly, I believe every 3 years, and they went through with stellar results, never had an issue, never had a problem.
So no change then.
No change, correct.
And, you know, in the approximate 24 years that the business was in operation, by that math, every 3 years, an audit every 3 years, approximately 8 audits were conducted during ACS's lifespan.
That's, as
Would
I
you agree?
recall, yes. I would agree, yes.
And no changes on those, notwithstanding the instant audit.
Correct. There were no changes.
I want to turn to the bundled transactions that the appellant business engaged in. During the audit period, did the appellant business sell cellular phones in something known as bundled transactions?
Yes, the industry did bundled transactions regularly, and that's why a $500 phone might cost a customer $100 when they went to buy it, because they would sign up for a contract, and the carrier at the end was Verizon. In the beginning, I don't know if you remember, it was Pactel, and then it was AirTouch, but in the end it was Verizon, and they would pay a commission which would offset the cost of the phone so long as the subscriber stayed as a Verizon customer for the set amount of time, either a year or 2 years.
So there was a reduction in the retail price of the phone for the customer with this bundled transaction.
Correct. We would offset the sale price of the phone, taking into account the money received from Verizon to get the phone to the consumer for less money, much cheaper. I mean, I think everyone's aware of how they work because everyone hates those contracts. So.
And how did the appellant business collect sales tax on those bundled transactions?
So there was a formula, and I don't have the exact amount, but basically, if a $500 phone was a retail value of a phone was $500, and it was sold for $100, they would collect tax on the $500 retail value of the phone. So if a $500 iPhone was sold for $100, they would charge sales tax on the full $500. Now, Auto Cellular had a policy that they added a fudge factor just in case the retail value varied. And the retail value varied on these phones from month to month because there was sales spiffs on them. There are sales goals, sales quotas. There's advertising discounts. There's advertising commissions. So Auto Cellular's policy was to use the retail price and add a slight margin of, say, 15%. So they would actually charge sales tax as if the phone was a retail value of, say, $575. And they would charge tax on that amount. So the sales tax at a 9% rate on the $575 sale would be in the area of $50. So we would collect $100 from the customer plus the $50 in sales tax.
Okay. And did all of ACS's 30 plus locations collect sales tax in this manner?
Yes, correct. And that was the standard, and that was what we advised to do several times. So that's how it was handled. And then the sales tax collected on those phones, again, was at every location and every retail sale.
To your knowledge, did ACS ever deviate from this policy?
No, that was the policy.
And was sales tax always reported in connection with this policy?
Yes, sales tax was recorded at the point of sale. It was shown on the customer's receipt, and it flowed through to the computer programs. We had one computer program. We switched to a newer one called Retail IQ at some point, but it was tracked, and those reports were printed out, and I think those are in evidence. Those Retail IQ reports, I can't recall. So, but doing this on Zoom is a little difficult because they don't have access to all that. So, but yes, we never deviated from that. That was the standard.
And I want to turn to the bad debts and chargebacks issue. So the bundled transaction was sold in conjunction with service contract, correct?
Correct.
And what happens if that service contract is canceled?
If the service contract was canceled within a certain time, and the cancellation would be by the customer, either the customer would no longer want the phone, they wouldn't pay the bill, they would call Verizon and cancel the service for a number of reasons. Then of that $500 phone that we sold, the $400 commission from Verizon was then charged back to us. So again, we sold to a customer for $500. We sold them a $500 phone. We collected $100 from the customer, and we collected $400 from Verizon. If the customer didn't stay on a set length of time, and it varied, I believe, Verizon would charge us back or deduct that commission from us, from our monthly stipend. So now we have a phone that cost $500, and we only collected $100 for it. So that $400 then became bad debt or chargeback. Now, to continue that, the challenge is when Verizon did that, then we had to unwind the sale. And then that customer was supposed to either write us a check for the $400 or return the phone. And we had contracts from them so stating that they would do so. Maybe 5 to 10% of the people did that, either paid us off or returned the phone. So on 90% of the chargebacks, we incurred bad debt. So we incurred the bad debt once from Verizon. And then second, when the customer didn't pay us or didn't return the phone. And then, of course, we had other bad debt, normal business bad debt where customers didn't pay us. But, you know, that's pretty standard. So there was 3 sources of bad debt: the chargebacks, the customers who didn't return the phone or didn't pay us to reimburse us for the commission, or normal business bad debt.
And were cancellations by customers normal in your industry?
They were very regular. They were operated probably of our sales. They were in the 5% of our sales range got returned or canceled for some reason. So we carried a bad debt. I think when we sold the business in 2013, we had over $1 million in collections on these types of bad debts that we had accumulated through the years. We were selling thousands of phones a month, as you might guess, with 20 to 30 stores. So we had a lot of chargebacks. We sold a lot of phones, and we had a lot of chargebacks. If you go in, if you take this a step further, because I'm sure you're going to ask this next, once that deal unwound, then that sale was canceled. The sales tax then did not become due. There was no due. So it was no longer a sale because the sale was canceled and terminated. So we now have a chargeback that we have in our books, but we also have a sale that's canceled, and a lot of those chargebacks don't necessarily go through the computer. So they become bad debt in a different way. So I think the biggest problem we have now is showing that we're showing the chargebacks and the bad debt, but the sales tax on the bad debt was written off. That's what I think the challenge is that we're having with this audit. This is why we fought it for 6 years, because there was a legitimate loss there where sales tax was no longer due that we didn't get credit for in this audit.
And it was always the policy of ACS to report the bad debt in this manner.
Well, the chargebacks were immediately reported on the computer because Verizon's computer talked to our computer, and they would deduct it automatically. But we carried the bad debt on the company books. And the process for eliminating those sales tax due on those unwound transactions was never really tracked well or clear. And I think, again, as I've told the auditor when we first met, that's, I think, where a lot of the source of this challenge has come from, is that we would have to just deduct bad debt, just deduct our estimate of corresponding sales tax on that bad debt.
Is there anything further you'd like to add, Mr. Parker?
No, you can come back to me if you think of something else, but I think that's pretty much what we told the auditors the first 2 or 3 times we've met with them, and that's why we're here, because it's still not understood. It's very complicated, I understand that, but it's still how we did business and how we did business for 25 years, and this is the first time we got hit with it. And again, we sold the business 2013, it's 2020, and we're still dealing with this and accruing interest and penalties, and it just, you know, it's just not, we haven't been treated well for the millions and millions of dollars we generated in sales tax. It's not warranted.
And with that, my questioning is finished.
This is Judge Cho. Thank you very much. Department, do you have any questions for the witness?
This is Randy Suazo. No, Your Honor.
Thank you. This is Judge Cho. Panel members, do you have any questions for the witness? I'll start with Judge Wong.
This is Judge Wong. I have no questions at this time. Thank you.
Thank you. This is Judge Cho. Judge Aldrich, do you have any questions for the witness?
This is Judge Aldrich. I don't have any questions for the witness at this time.
Thank you. This is Judge Cho. I just have a quick question, Mr. Parker. You said that when the sale was unwound, in your books, you would not remit the sales tax anymore because the sale was canceled. Is that correct?
That's correct.
What happened to the sales tax that you collected from the customers at that point in time then?
It was applied to their account immediately as a credit because they no longer had that due. So if they owed us $400, but they had paid us $50 of that, we would credit them back that sales tax in full against their account.
Okay, thank you very much. That's the only question that I had. Why don't we move on to Appellant's presentation? Mr. Ray, are you ready?
Yes, Your Honor.
All right, you may proceed. You have about 30 minutes.
Your Honor, that was probably an overestimation at our pre-conference hearing and was inclusive of Mr. Parker's testimony. So the 30 minutes would not be needed, just as state that up front.
No problem. Take your time. Thank you.
And in fact, my comments will be relatively short. Mr. Parker's testimony evidenced the operational structure of Appellant's business. And through his testimony, we heard of Appellant Business's 24-year history as a retailer for cellular phones. It underwent sales tax audits frequently, coming up like clockwork every 3 years. And for that period, notwithstanding the instant audit, always resulted in a no change during those years. So the business had an established rapport in correctly reporting sales tax. And through his testimony as well, we've heard that the business's general operating standards collected sales tax in conformity with the Revenue and Taxation Code and the regulations promulgated thereunder. In this industry, as mandated by the code, sales tax was collected on the retail price of the phone, not what the customer tendered, and that was reported as such. And with respect to the respondent's measure of unreported taxable sales, respondent bases this determination on the transaction by account reports, which the respondent used to extrapolate out a variance between imputed sales tax reimbursement and what was reported, and that purported unreported taxable sale was in the 3.2 million figure. But as Mr. Parker testified, the chargebacks were fairly normal. Even during the 2016 appeals conference before the BOE, the appeals board referenced how frequent the chargebacks were in this line of work. So to extrapolate out an unreported sales tax without giving any offset for the reality of the chargebacks that occurred is not in tune with the reality of the industry. Additionally, Appellant did attach exhibit number 4, which was additional chargebacks, evidence of chargebacks. These chargebacks were found following the re-audit period, but during the pendency of the appeal. They should be considered by the respondent, and to the effect the determination by respondents' unreported taxable sales that it imputes to appellant. So there is evidence of additional bad debt deduction, and to uphold the respondent's measure of unreported taxable sales as it stands is unwarranted, is erroneous, and is unjust towards the taxpayer.
Does that conclude your presentation?
Yes, Your Honor.
Thank you. Panel members, do you have any questions? I'm sorry, Mr. Ray, would you mind muting your mic?
Oh, excuse me, sorry.
Thank you. Panel members, do you have any questions for the appellant at this point in time? Judge Wong?
This is Judge Wong. I have no questions.
Thank you. Judge Aldrich?
This is Judge Aldrich. I don't have any questions.
Thank you. Then, department, please proceed when you're ready with your presentation.
This is Randy Suazo. The appellant is a corporation and a retailer of cell phones and related accessories. They are an authorized dealer of Verizon Wireless, and during the audit period operated 34 locations in Los Angeles, Orange, San Bernardino, and Ventura counties. The business start date is July 1st, 1989, and prior audits were performed. On the prior audits performed, there were deficit audits involved. The audit period is this audit period is from July 1st, 2009 and June through June 30th, 2012. The books and records provided for the audit included federal income tax returns for 2010 and 2011. Sales tax payable account 25-100 for the audit period. Profit and loss statements for 2010 and 2011. RQ4 reports for claimed labor amounts for periods 4Q10, 1Q11, and 2Q11 as well. Sample sales invoices and partial pay bills for 2011. Verizon summary commission statements, which included chargebacks, were also provided for the audit period. The auditor was unable to determine how total sales, the amounts received from Verizon for bundled sales of cell phones and accessories, and claim deductions were computed. Exhibit A, page 5. During the appeals hearing, the appellant stated that the sales information from its point of sale system was exported to an Excel spreadsheet, and this tax worksheet was used to prepare sales and use tax returns. The appellant did not provide a copy of the sales tax worksheet to the department. Exhibit A, page 5. The appellant states that their reporting method is as follows. The amount of money received from customers, discounted sales price for a sale is included in total sales reported on line 1 of the sales and use tax return. The amount of any discount, if any, received on the sale is listed as purchases subject to use tax on line 2 of the sales and use tax return, along with other proceeds received from Verizon for bundled sales. Appellant's opening brief, page 5. An example of this would be if the customer pays $299 on a phone with a retailing selling price of $740, the $299 is recorded on line 1 of the gross sales. The discount received of $440 and a penny is entered into line 2, purchases subject to use tax. The customer is billed $299 plus sales tax at the full selling price of $740. At a 9.75% tax rate, the tax paid by the customer would be $72.15. And the total amount paid by the customer would be $372.14, which is the $299.99 for the discounted phone, plus the $72.15 on the full tax based on the full retail selling price. Appellant's Exhibit 3. The appellant would have collected the full amount of tax directly from the customer and should accordingly report the amount collected to the state. The appellant under these circumstances is acting as a pass-through only, and since the full amount of tax is paid by the customer, The appellant is not creating an accounts receivable or anticipated proceed on the actual sales tax itself. The federal income tax returns for 2010 and 2011 were scheduled and reviewed. Differences of $2,437,451 for 2010 and $1,971,097 for 2011 were noted. They were not assessed as they appeared to be primarily due to commission income not reported on sales and use tax returns. Exhibit E, page 99. No bad debts were claimed on either federal income tax return. A sales tax reconciliation was performed using General Ledger Sales Tax Payable Account, account number 25100, as a source. The sales tax collected posted monthly under the GL memo header, Retailee Q change in account on a monthly basis. The monthly sales tax collected was scheduled into quarterly amounts and compared to reported sales tax. Differences were noted. Exhibit E, pages 95 and 96. For period 3Q09, 0 difference was noted. 4Q09, 0 difference was noted. 1Q10, no difference was noted. For 2Q10, only an $18 difference was noted. However, following from third quarter 10 through second quarter 12, large differences were noted. In third quarter of 2010, a $22,735 difference. In the fourth quarter of 10, $152,043. In the first quarter of 11, $10,145 difference noted. In the second quarter of 2011, $74,448 difference was noted. In the third quarter of 11, $7,134 was noted for a difference. The fourth quarter difference for 2011 was $11,470. First quarter of 2012, a difference noted of $10,372. And finally, in the second quarter of 2012, a difference of $13,412 was noted. Total difference noted for the audit period was $301,777 worth of sales tax. The appellant stated that the reported sales tax payable account provided during the audit period was not complete due to a query error in generating the report. The appellant claims that the report did not include all sales returns and cancellations. They further stated that due to turnover in accounting staff, they did not adjust sales tax timely. Exhibit D, page 54. The appellant was asked to provide a download of its sales from its POS system and other applicable documentation to support their contentions. The appellant has yet to provide the data requested, and no adjustment has been made to the assessment. It should be noted that that same query was recorded to the sales tax payable account in 3Q09, 4Q09, and 1Q09 showed no differences, and a very minor difference of $18 for the second quarter of 2010. Exhibit E, page 96. In the re-audit, the bad debt deduction that was disallowed and assessed was removed. However, this was not because the bad debt deductions were accepted. Rather, it was to correct the fact that by disallowing the deduction, sales tax would be assessed twice for tax collected. There is no evidence that the petitioner failed to charge sales tax reimbursement on taxable sales. Therefore, sales tax collected from its customers is included in the sales tax payable account. Due to the manner in which the assessment of sales tax reconciliation was established, by comparing the sales tax payable GL account to the sales tax reported on the sales and use tax returns, any disallowance of claimed deductions would have a doubling effect on the assessment. Exhibit A, page 12. The appellant believes that they are entitled to a bad debt deduction as they state that chargebacks by Verizon for customers who have terminated their contract would constitute bad debts per Regulation 1585 C2, which states, chargebacks to the retailer. Retailers reporting tax measured by the unbundled sales price of a wireless telecommunication device may take a bad debt deduction pursuant to Regulation 1642 when a payment or rebate from a wireless telecommunication service provider is charged back to the retailer based on the customer termination of its contract with a wireless telecommunications service provider before the date specified in the utility service contract. The amount of bad debt deduction claimed by a retailer may not exceed the difference between the gross receipts on which tax was reported, paid by the retailer, and the total amount collected and retained by the retailer from the sale of wireless telecommunication devices, excluding any amounts collected from the customer's tax or tax reimbursement. Any tax or tax reimbursement collected by the retailer on the amount of the bad debt deduction claimed by the retailer constitutes excess tax reimbursement and must be returned to the customer or paid to the board unless the customer and retailer agree that this amount may be applied towards the amount owed by the customer on the debt. The customer and retailer will be regarded as having agreed to the application of any excess tax reimbursement to the customer's debt where the retailer's books reflect both the debt owed by the customer and the corresponding credit for excessive tax reimbursement. The appellant has provided Verizon summary commission statements that include monthly summarized chargebacks information. Appellant opening brief exhibits 4, 5, and 6. However, detailed information concerning customer's name, original sales date, amount which retailer paid tax, payment history, date of determining bad debt have not been provided. Exhibit D, page 61. Chargebacks on Verizon statements would include both taxable and non-taxable income. Without original contracts or sales details and payment records, it is not possible to establish the appropriate taxable measure for any bad debt allowance. Exhibit A, page 17. Furthermore, for bad debt expense to be accepted, the department must verify that bad debt expense has been deducted from income tax purposes or charged off in accordance with generally accepted accounting principles. The 2010 and 2011 federal income tax returns do not have claim bad debt deductions. Exhibit E, pages 99 and 100. The appellant has been asked several times by the department for detailed information to verify their claim. However, no information has been provided. This concludes my presentation. I'm available to answer any questions you may have.
This is Judge Cho. Thank you very much, Department. Panel members, do you have any questions for the Department? Judge Wong?
This is Judge Wong. No questions.
Thank you. Judge Aldrich?
This is Judge Aldrich. No questions.
This is Judge Cho. I don't have any questions either. So, Ms. Cerritos, you have about 5 minutes on your rebuttal, but since you didn't use all your 30 minutes, you can go a little longer if you'd like.
Thank you, Your Honor. I will make a comment with respect to the respondent's reference to the federal income tax returns. The respondent has stated that the federal income tax returns didn't include all of the gross receipts and the bad debt deductions. However, the 1120S filed by Appellant applies a much broader definition of gross receipts. And this would include gross receipts, not just from the sales of cellular service devices, but for all business operations, not merely retail sales. The tax court has clarified that non-sales income is included in gross receipts. And that was Hewlett-Packard Company 139 Tax Court Memo number 8 in 2012. So the reliance on a federal income tax return, which has higher receipts than what is reported on the sales tax return, should not indicate a measure of unreported taxable sales. There's simply a different definition of gross receipts for federal income tax reporting purposes. Furthermore, temporary Treasury Regulation 1.448-1T includes in gross income, includes in gross receipts income from all outside sources and is not limited to merely sales income. Additionally, the groupings and categorizations for sales tax return purposes are vastly different than income tax return purposes. As a result, any federal income tax gross receipts listed on the return cannot be the basis for purported unreported taxable sales that the respondent seeks to impose.
This is Judge Cho. Does that conclude your rebuttal?
Yes, Your Honor.
All right. Thank you very much. I'm sorry, Ms. Cerritos, would you mind muting your mic?
Oh, I apologize.
Thank you very much. All right. Any last minute questions, panel members? Judge Wong?
This is Judge Wong. I just had one question for Ms. Cerritos. Can I get those sites again, and the Treasury Reg site and the case name and site, please?
Yes, the tax court case was Hewlett-Packard Company versus Commissioner of Internal Revenue, 139 TC number 8, 2012. And the Treasury regulation, temporary one, is 1.448-1TF24. And 4 is the numerical.
Mr. Zhuang, thank you. No further questions.
Thank you.
This is Judge Cho. Thank you. Judge Aldrich, do you have any last minute questions for either party?
I don't have any questions for either party.
Thank you very much. All right, I don't have any questions either. This concludes this hearing. The panel will meet and decide based on the documents and testimony provided today. We will issue our written decision no later than 100 days from today. This case is submitted and the record is now closed. We'll be taking a brief recess before the next hearing, which is set to begin at approximately 1 p.m., I believe. Thank you very much for all your participation.